started my recording. Okay, there we go. Okay, so bias for today. What I was looking for today, how it segues from Sunday. And then obviously today's kind of execution if you wanted to see that. Didn't take any trades, so that's a win, but I do want to see. Yeah, exactly. So if you didn't take any trades and you were bullish, that's a win. Yesterday, I didn't take any trades. That's a win. On Sunday, I had mentioned how I'm not going to go through my entire Sunday bias or anything like that, but I mentioned how on Sunday I was looking for higher prices going into Monday if it was allowing me to. That market review stream is posted now in the YouTube vid section if you want to go back and watch that. But for those who were there, I was saying that we had previous weekly high in pretty close proximity to where we were opening up in here. I think I was doing that stream around 9 p.m. So around hovering around here at the time. So anytime we're in close proximity on Monday to that previous daily high or the previous weekly high, that's always a good draw on liquidity. Even if we have news, if we have no news, that's normally a pretty just smooth target. Now, going into yesterday, when I'd woken up, it was a bit harder to tell if we were going to have a run above here or not. And it being a Monday, my kind of protocol is, or at least my anticipation for this week is that Thursday and Friday is going to be the best movements. Obviously we had this nice movement today, but basically on Monday I was like, I'm not forcing anything that's maybe there and maybe not there. If it doesn't look great to me on Monday, I'm leaving the charts. Okay. That being said, Monday drops back into an efficiency there with the new week opening gap, and then expands up, takes out the previous daily high. And even in this leg, I don't think there's a lot of super high quality setups unless you were able to get there's like a 936 retracement entry, but within this almost limit up, there's very few entry opportunities, right? It does expand a great deal, about 200 points. So you may look at that as a missed move or something. But for me, I didn't take any trades. Just like JKX said, if you don't take any trades, that's with your bias, that's a win. Easy as that. Now coming in for today, what was the bias for me today? So obviously that run on previous weekly high is an important key PD array in the form of an ERL. On a 4-hour chart, that's going to be important because we can start to look for if we're running this high and potentially if there's SMT there. But if they're running that high and now we're starting to get a violation of order flow coming into the session, then we can start to look for lower prices in the form of an inefficiency, which we have one down here. It's a reclaimed gap, but nonetheless an inefficiency. And then potentially the sell side, which I was looking for last week down here. So on the 4-hour chart, what do we have? We have, clear out some of this stuff. We have this gap being traded through on a 4-hour chart coming into the session. Not a lot of displacement you can see through here, but that's our first indication of a potential reversal signature would be a gap being traded through, preferably with displacement. Now on the 1-hour chart coming into it, you have displacement, there is swing low, there is change in state of delivery, as well as new order flow being held. So we have a run on the previous weekly high. We have SMT as well between Monday and the previous weekly high with YM. Okay, that's another key factor, like I said. So SMT with previous weekly high, 4-hour chart now showing a small indication that it may want to reverse, but that's not good enough for me. On a 1-hour chart, I want to make sure that we see that confirmation. So drop down here, gap, trades into it, displaces again, gap, trades into it, drops again. So coming into the morning session, I'm bearish off of that. We do have the London session high here as a supering opportunity. And you can kind of see it's around 50% of that implied dealing range, whatever you want to draw it from, right? So it would make sense. We have a consolidation and potentially a soup in the midway. Now, for someone who's bullish, I can kind of see where you're looking at, right? We have kind of these deep retracements going on here, and then in here, and then in here, all kind of offering entries. Now, when you look at it, to me, it's much harder, at least for narratively, right? We think about when we're looking at pattern wise and just with the order flow, sometimes we can get caught up. Same thing with, session profiles and such. If there is something that looks like a New York Open reversal, looks like a London protraction or whatever. Anything that looks like something normally doesn't have enough data to support it. So in this case, the order flow sometimes is enough data to support it. You do have a bullish order block here being traded all the way into. If it was a retracement, would you like to see displacement legs in here? Probably not. That's one thing, okay. You do have an energetic run away from it. That's fair. On a 15-minute chart, you look at it. What is this? Right? That's very high resistance, generating that low resistance liquidity right above a a key level, right above a key level. And on the 1 hour chart, you go back at this, you have highs being ran out mid-jagged, and then you've got lows right here that are all decently smooth, in my opinion, right? All those kind of lows, especially with there being SMT up there. I think it's a little bit easier to see that. So if you don't do a full top-down analysis in the morning, you're going to miss some of these things. So there's times where you're going to have an approach where you're just looking at the 1 hour chart, i.e. when we're in a consolidation, that's fine. But when we're at these extremes at the levels, you want to be making sure you're doing a full top-down analysis, arguing both sides. If you don't do that, you're skipping something. I think it's a little bit easier to see now, maybe in hindsight, why be bearish. You're arguing the bearish side. Okay, you have all these things lining up. But then for the bullish side, you do have an order block, trading into the order block, displacement away on the 1 hour chart. On the 15-minute chart, there's not much there. So maybe if you were hesitating to see, okay, maybe I'm slightly bearish, but I can argue bullish, I would be marking out this gap. It's a gap in a short-term discount of a dealing range. And potentially if we were going to go back for the previous daily high, we're going to drop into discount and then move back up into premium. So as soon as I were to see that closure through, and obviously just the trade through completely, that may be an indication where that's a line in the sand for you, and you could say, okay, I'm going to flip now. But I think when you're looking at it, it's a little bit easier to see the order flow, and that's why I say narrative. In kind of the equation, you get narrative gives you bias, which gives you draw on liquidity. All right, narrative gives you bias, which gives you draw on liquidity. Narrative is the story of what price has been doing, and that'll allow you to read what's it's likely to do next, right? What is it doing now? What has it been doing? What is it going to do next? Bias will give you the directional draw that you like. Okay, whether that's an open, low, high, close, open, high, low, close. The only two biases you can ever have in an ICT study. There's only two: open, low, high, close, open, high, low, close. Those are the only two biases. Then draw becomes what you're looking for. If I'm expecting price action up here to be trading into an IRL in premium, where's it going to likely go for? ERL and discount. I had an ERL marked out here from the AM session low, or sorry, the previous daily low. We had this ERL here, which in hindsight I probably could have held to. I didn't end up holding to this one. I just took it off at the previous daily low. But you still have this ERL here in a short-term discount, which was Friday's daily low, both of which would work. And now you can see a little better the framework of it going from an IRL to an ERL to an ERL. Just an energetic displacement. And there's no rules against Tuesday moving quickly or non-Newsday moving quickly. So as you learn more about distinctions of price action, of what it can do, don't limit price too much, where then when something big happens, you're surprised by it, and then that kind of surprise or excitement factor makes you do something irrational, right? If it looks weird, if it maybe is doing something you're not familiar with, the best thing you can do is to wait, learn from it, and see what happens after. So I was personally bearish coming into the session. So when I saw it kind of slow grinding up here and then consolidating prior to 9:30 open, running that consolidation high at 9:30 with the London session high, with SMT, as soon as it took at that SISD, I got in there. So a soup, but kind of a SISD of the soup. I could have limited in there, I guess, but soup at 9:30, re-pyramiding in on the first presentation gap, and then taking some off on the AM session low right there, and then taking more off on the ERL from previous daily low, as I said, and then shoulda, coulda, woulda, left some runners down to the next ERL. I'm completely fine with missing that. It's still a good 100 points or so, which that would have been great, but it was still like a 5+ R, 6+ R. I don't really know, 5+ R maybe. So that is my weekly goal met on a Tuesday. So I don't need to be trading the rest of the week if not need to be, but I'm still going to be looking for setups, Thursday, Friday. That's kind of my goal. But the nice thing I do like, I'm going to mention something about the entry here, is the nice thing that I do like about waiting just a little bit here for me is I've found that if I do place a limit order here, one thing I struggle with is where do I place my stop? Because I'd be perfectly fine actually if it came up, tagged the Asian high, and came back down as well. So I don't think there's any problem with that. How far does it go above that? That London session high, even by a tick. So my stop placement there is where I get a little sketched out on. I mean, I could do a fixed stop or something like that, but that to me just isn't logical enough for me to do that. So I'll wait just for a little bit on a 15-second chart. I'll wait for just one little candle, drop down, give me the 15-second SIST or 1-minute SIST, enter in here. Then I have a bit more of a refined stop loss placement. Okay, my stop goes right there or right here, right? At that point, okay, it's a little bit easier to see where it's likely to place my stop, and now I have a very defined risk and exit parameters that gives me a much easier opportunity to take a good trade. So if you want to see that execution, I guess I can post it up on the screen here. I may have it. Oh, that's not it. Oh, actually, maybe I'll have it on my clipboard right here. So, like I said, souping it at a high at 9:30, pyramiding in as it gets me all these different entries at the first presentation gap, one last pyramid entry here at 8:05, and then buying them at the lows, which, like I said, I should have left a runner there just for the next one, even if it was one contract or two contracts. That's a flaw on my end, so which I journaled for about 5 minutes. I got to go back in and journal the rest. And this is why it's trading is a very weird game, because it's going to leave you unsatisfied sometimes. It's going to leave you satisfied sometimes, but you cannot leave your the weight of that satisfaction based off of your P&L or based on the fact that you're getting an entry. You may look at this, and if you were bullish, or maybe you were bearish and you just didn't get a short entry because you're waiting for macro time, that may leave you unsatisfied, right? You see me or you see someone else saying, "Oh, look how I'm nowhere in this am I saying this is easy." All right. At all, this is not an easy trade. This is maybe not an easy bias either. So I'm not going to come in here and say this is something that you missed or something that should have been clearly seen or anything like that. So do not feel that if you had a bullish bias or if you had a bearish bias and you didn't get a trade, that you're missing something, or that it's leaving you unsatisfied. That's the importance of the journal. Importance of the journal is when you go back in, you can write down and you can brain dump all those emotions, so then you don't have to think about it for the rest of the day. I don't want you thinking about for the rest of the day, oh, if I had only taken that short, or oh, if I had seen my bias, I could have gotten a 16R and be done for the month. Right? That kind of thinking is just toxic. It does absolutely nothing for your trading career besides dwindle down your self-confidence and make it take even longer than it should. But I want to put that out there because I know it's very tempting to think those thoughts when something like this happens, when in reality, it's a Tuesday, right? We could have the same kind of move happening maybe tomorrow. We could have the same move happening Thursday, Friday, and who knows, right? And even this drop itself is showing that, okay, we got some displacement both on Monday, Tuesday. It's building in for a nice week. You get targets now on the upside. You get targets on the downside. You got gaps all over the place. To me, this is an environment that I love to be in. Even if I had not taken this trade, it's building my bias to make it so much more engaging and, to be honest, fun than trading at all-time highs and just keep longing it. Than the bias that we had maybe going on Monday, or as we're digging into the highs and such. But hopefully that helped. Maybe get you an understanding of why I was looking for shorts coming to the morning. And this is why, when you develop a model, bias, the time to take a loss is, there's going to be some other ones. Bias is the main thing, right? This is in your skill as a trader. Most times, I would say, at least for me, 80% of what I do, like skill-wise, like where I'm actively using my brain to, besides the tape reading does require a lot of skill, but I'm saying like where I'm really going into it and saying, where is my skill as a trader over the past couple of years? Where is most of my actual professional mastery being applied to is bias, you know, where that bias, if you have a good model, you have ways of it getting in, all you need is where's the direction. You could probably get on any PD array towards that draw, and it'll be a very easy day for you. So when you see people taking good trades or something, don't ask what was your entry. Ask what was your bias. That is a much better question, and to me, that shows um, if you're asking those kind of questions, and okay, I could have seen that entry, the top tick entry, the low tick entry, whatever, but ask why they got their bias there. Why were they bullish, or how do they know that they were bullish or bearish at that given time, given the data, right? They see the same data that you see, but why is it that they maybe are leaning one way and strongly leaning that one way compared to you? And that's where you have to maybe sometimes put aside your ego, put aside your preconceived notions of, of price action or whatever, just to learn. And that's why I've always tried to cultivate kind of a learning environment in this group, both in the private group and in the public. So all the questions all the time will always be validated. I think I focused on the daily chart continuation and used the 8-hour gap order block to support the idea. Didn't focus enough on the 1 hour. Yeah, that could be it. I think that's reasonable. The daily chart there is still a little weird to me. Weekly chart. Yeah, it's for me. The main higher time frame one I'll use is the 4-hour. I'll use the daily and the weekly occasionally, but with this kind of weird consolidation ranges and stuff we've been having, I've shifted away from those. But yeah, I think it's perfectly reasonable to see a bullish continuation. Just you gotta, at least I would say the minimum one you gotta drop to is the 1 hour. You don't have to drop to the 15 if you don't want to, but I think the 1 hour chart and that order flow is going to be super important, because that 1 hour chart, when we're looking at trading the session, what are we trying to capture? We're trying to capture the session move, session high to session low if I can, sometimes the session low to the daily high if I can. But that's why, to me, I'm using the 1 hour and the 15, because of the fact that if I'm trying to get a session bias of where I believe that this next candle in the 1 hour, couple candles in the 1 hour are going to go to, I'm still going to rely on the higher time frame to give me that bias. But then the 1 hour and the 15-minute chart are going to tell me basically everything that I need to know going right into 9:30. Right into 9:30, where's that draw? Right into 9:50, where's that draw? So sometimes when I use the daily chart and the weekly chart, I realized, okay, I can see the entire day or the week going here. It's beneficial, but then you have to drop that down. Okay, the week is bullish. Okay, if the week is bullish, well, you have to understand that if the bias is this way, well, then the first couple of days for that week could be bearish. So then you got to go into the 4 hour and see if you see the move down, et cetera, et cetera. So that's why, to me, if I had to just pick one chart for bias, I would use the 1 hour chart. Obviously, it's not going to be a swing trading thing or anything, but the 1 hour and the 15, both are giving you reasonable points as to which price action is going to go to. And normally what you're looking for, a little gem, or I don't know if it's a gem really, but anytime you have a manipulation DOL, your targeting DOL is going to be one time frame lesser. So meaning if I'm using this hourly gap or this hourly buy side as my manipulation draw, meaning where we're likely to manipulate to before we expand towards the next one, well, then my targeting draw should be one time frame lesser. So if I'm using an hourly chart here, I should be using a 15-minute chart to identify those key levels, which most times they do line up. So I'm not going to say it's anything important, but that's why sometimes you'll see these ultra refined areas in price that are being swept. Right here, you have a swing low, not really time based. So you look at that swing low next. As targeting purposes and such. But right now on a lower time frame chart, 5-minute, 15-minute, 5-minute, both are decently bearish. So did you move your stop above midnight opening price and breakaway gap when you scaled in? Yeah, when I was scaling in, my stop originally was at the swing high, and then as I was scaling in, my stop was trimmed to here. I didn't use midnight opening price. I trimmed it first to with just a tiny trim basically to there. Once we had even formed this gap, I was like, okay, there's no reason I should go for the high. Um, but then eventually, yeah, my stop was trimmed to the breakaway gap. And then as it displaced again after reaching to premium there. By the way, when you're looking at this on a lower time frame, 15-second chart, you say, why doesn't it drop here, Flux, inside the first presentation gap? 1, 2, 3, 4, 5, 6, 7. Why is it that one? It has to reach into premium, right? The function of price in this case is retracement. So it's going to look for premium, preferably if your value gap and preferably an order block as well. But it is going to keep digging into this. If it's in a true state of retracement, it needs to reach premium. And then you can see, boom, right as it tags premium right there, wicks it, comes back down, then it drops again. As soon as it started to drop again, it took out that low. I trimmed it from there to the swing high, and then kind of just left it there as I was scaling out. Obviously didn't get tagged, but yeah, that's the way that I was managing that stop as I was scaling in. Obviously, though, scaling in, I was most of my position, 80%, 60% of my position at the end was scaled in from here. Another 33% was scaled in lower. So as you would imagine, my stop is constantly, as I'm DCAing, being dropped. So I'm not really worried that too much about that. I'm still worrying about where this stop should be going. So even if my DCA drops a little bit, I do want to be entering in an area where when I'm scaling, my DCA isn't going to make it so my stop loss is double what I originally put, but rather if I can trim, then I can DCA. Normally I want to be trimming, DCA, trim, DCA, or at the same exact time, then, so the risk isn't insanely high. I favor that. Okay, once I move to break even, at that point, it's kind of a free trade in my mind where I can scale in a little bit more aggressively, not too much on PDA rates, but rather just like SISTs on a 15-second chart. And as long as it's not going to push my risk super far back into a loss, that's the way that I do it personally, which is going to be different from others. So I'm not going to say copy that or anything, but that's the way that I prefer to do it. But the main thing you got to realize is, that top, if we're shorting, this needs to have the majority of the chunk. Then maybe here a second chunk, third chunk, and constantly scaling that position downwards where 60% of it to 80% is up here. And then you have the bottom of it being that 20%. And preferably all of the scales, if I'm shorting, need to be in premium. So right in here is maybe the last one I had, 944, which was definitely a little bit is right on the line of where I was taking the target. But I saw this as kind of that second stage of distribution, so I was fine with pyramiding a little bit more there as I ran out the ERL. There you have it. DOT 1030 for the session. Preferably, yeah. I love to see that. Right in here. We do have to be a little bit careful as it consolidates. It just expanded a great deal and took out ERL targets, which potentially could be the entire targets for the session or the day. So we do need to be watching to see if it wants to consolidate, which it was doing in here. As long as it starts holding these PD arrays. I would expect that. I wouldn't be surprised if 1050 macro gave a setup. But yeah, looking down for here, and then target-wise, we do have this AM session low from Thursday, which is a bit more high resistance. So I'm perfectly fine if it consolidates within here for the rest of the session and potentially into lunch. What I don't want to see coming to tomorrow is for these gaps to be completely filled in. If tomorrow we see these gaps, this one I'm fine with, but if it comes up into this one and I see Wednesday open up like this, I'm either going to sit out or I'm going to be bullish. But I would really favor if this is going to be the high of the week, or at least high for Wednesday, and Wednesday we can be bearish again. Thursday, it could be a little weird. We have unemployment claims, which is potential for a consolidation reversal profile. So we just have to be mindful of that. I'm not saying that's what the profile is going to be. Just be mindful of it. And then treating it day by day as we normally do. All right. So I don't want to hold you for too long, especially if you're trying to look for a setup. Not really much I could say to tape read. You get a first presentation gap. That's really only one I would study. And then macro time, you don't really have much in here, right? You got an entry off the gap in here, runs down, takes up the swing low. But, when you have a large precipitous drop, in the morning, sometimes the macro there is going to be a little bit harder to use, but 100% believe that at least we should form a new low post 10:30, finish out the session, and then whatever happens the rest of the day, we can be done. All right, so hopefully that all makes sense, and you're able to learn from it. Obviously, journal if you haven't already. I got to finish out my journal, about 5 more minutes of it, and then yeah, I uploaded the recording from Sunday if you want to watch that one, and then this video will also be posted by the end of the day today. And then I'm still catching up on DMs from the weekend, so if I didn't get to you, I'll get to you today. And then got any questions, send me a DM as well, and hopefully we can be back streaming either tomorrow or Thursday. We're still on a day-by-day basis for tape reading, so trying to take it slow, and if there's anything I see very clear bias, very clear entries, then we'll do a tape reading stream. Sound good? So take care the rest of the day. Journal if you haven't already. Take care of yourself, and I'll talk to you guys soon. Peace.